today's episode, we had Rabeel Warraich with us. He's the founder and the general partner at Sara Malvy, one of the biggest VC fund in Pakistan. It's $25 million. It's been deployed to invest in Abhi and Bykea in the early days, and now they are building a fund with the Saudis. It's very exciting, and join us in this discussion. You will just love it. And please do subscribe in the channel. It will mean the world to me to support this content.
Very interesting. Okay. So you convinced them, even like we had like a really bad episode in Pakistan of like overvaluation that happened for a lift and stuff. Yeah. How did you came around this season?
So good question again, but we call it luck or good timing. We actually started before airlift was even around. So some of the entry valuations that we got will be impossible to get now.
Right.
And some of those are the best performing companies that we have in our portfolio.
Like, let's give the audience some examples.
There's this company called Simpesa, which is a payment aggregator.
Okay.
You wouldn't have heard about it because it's a B2B2C play. At that time, we also invested in a household name now called Bykea. So
this is I know.
we were part of the first round into what is now a bank called Abhi. They do earned wage access as well. And a lot of at that time, we were also able to get board positions in these companies because of like the size of checks we were writing. And what that allowed us to do was to see maybe some of this heating up of the ecosystem and the valuation increase a little bit before it started happening. So if you look at our deployment history in the country, we actually deployed the least in these years 2020, 21, 22, because that's when the entry point was very high. And the thing about generating returns is if you get your entry wrong, it's very unlikely that you're going to make good returns because the rest of the risks are still the same. Even if you pay up at the beginning, you still have the founder risk, you have the technology risk, you have the execution risk, financing risk. All of those risks still remain, but you're just cutting down on the returns. And that trade-off is very critical for Pakistan. And that's why we've seen this kind of capital dry up from the ecosystem, because there are better trade-offs or better alternatives available for the same level of risk, but better returns are available elsewhere. And again, that's a longer debate we probably don't want to get into, but navigating that is the very job of a fund manager. Right, like that's the trust I was speaking about
risk
earlier.
Management.
Exactly, risk management, and to be able to figure out when to deploy more, when to pull out. And I should say nothing is perfect, right? We've also had mistakes. We've also invested in some companies at the height of that bubble, which have not panned out. But that doesn't. The model allows you a little bit of that. I don't want to call it flexibility, but it caters for some of those mistakes because it operates on a portfolio basis. So as long as we manage to hit those a couple of home runs from the time maybe before valuations were inflated, I think we should still be doing okay. We have managed to return some capital to our LPs as well, which I believe we were the first ones, and I believe to this day still the only ones that have actually had consistent quarters of DPI being generated for our investors.
Amazing.
But it's still very early for the entire ecosystem, even though our fund now is in its 7th year. So from a fund life perspective, it might be.
So we're talking about 10 years.
Yes, it's 10 years. It can be extended, but I think our intention is to
generally in emerging markets more 10, 12. And US, it's like 5, 7.
Exactly. And I think Pakistan, the direction of travel is still right. The penetration has still a lot of room to grow. The mismatch between VC per capita in Pakistan versus countries like India, Indonesia is still tremendous. But the challenge is how many of these startups can survive this period when funding has dried up. And that then goes back to the question around unit economics and really sustainable
business
earnings
from day one.
Yeah, exactly. And I think it's good that the ecosystem is now focusing on that.
It's everywhere in the world. I mean, it's drying up everywhere in the world. And Pakistan and emerging markets is
Absolutely. The other thing that period has done, just sorry to just to complete that thought. The other thing that has happened is the resilient founders have also emerged through this period. Right now, who is there to stay, who has navigated this environment better than others. And I think capital is going to continue to flow to them, because it's not that people are not looking for opportunities to invest in. It's just that the spray and pray era is a little bit done, because sometimes at the beginning of an ecosystem, people think that, okay, just spray it around, we'll
Burn
catch
it.
something, and ultimately, like,
We're going to succeed one day.
we'll succeed one day, right? I think we don't have the liberty or the luxury of doing that in Pakistan.
No. So you've been investing in early stage. I guess like in all emerging markets, especially Pakistan, it's really well needed, and especially early stage, sometimes we don't need much. I was with Sara Munir from Eye to Eye in Karachi, and she was telling me like maybe sometimes a $3,000 check or $5,000 check can really bring a project to life. So how you position yourself in this early stage savior? Maybe.
I want to find some of these $3,000 or $4,000, $5,000 ones, but I think the point that she's trying to make is a valid one, which is that your dollar can stretch very far in Pakistan if you are spending it the right way. And sometimes it's really just about encouraging someone to get started. These days we argue that, hey, you can start without even going to an investor, because really, if you have like, some savings of your own, or if you start with friends and family, the key is to get started. And now there are enough tools, enough resources around in the ecosystem, and also a lot of learning on what to avoid. For example, if someone has spent $1 learning a lesson that hasn't worked, you shouldn't be spending another $1 learning the same lesson. And maybe that speaks to the larger, kind of like communication and interaction and collaboration that we need in the ecosystem. But we have the benefit of that. Like I mentioned earlier, if $1 billion have gone in, and we don't have a value to show for it, then we should at least have the lessons to show for it.
Of course.
And sometimes we're a little bit cagey in sharing those lessons. But I think when you have ecosystem enablers such as Sara, they become conduits for some of that learning as well. The same way we are now smarter than we were 7 years ago when we started about which set of spaces to invest in, how to guide entrepreneurs around different stage and phase of their company, and where to spend money and where not. We still will make mistakes, but at least the second, third time we should be better at
better and better. It's exactly why I launched this Wasssl Media, because I felt like it's kind of a tech crunch for the MENAP region, and I felt like our ecosystem from Morocco to Pakistan are insight-based ecosystem. They are not data-based, not yet, because US and Europe have built their database like the last 40, 50, 70 years maybe, but we are not there yet. And as you said, like an entrepreneur from Egypt or from Pakistan will repeat the exact same mistake as other entrepreneur, because he didn't learn the lesson, he was not exposed to this, and he will just maybe burn unnecessary capital or energy or time. So it's exactly like to share those insights from the ecosystem and helping and empowering entrepreneurs to navigate it in a more clear, let's say, vision, and having a 360 degrees of some industries, some also markets, because Pakistan and Egypt, I found there is a lot of similarities, but still very few Pakistani company will expand to Egypt, and oppositely, I mean, it was done by Swivel, but very badly. That's not the right example. But they was in that burning area.
But I guess if you take Maha's example, there was learning from there, and now it's being done in a way that is much better suited to the Pakistan market as well. So it goes back to the same point around learning as well.
So how you think, talking about global expansion, how you think startups from Pakistan can compete internationally?